Good afternoon, all the lovely ladies. So, I welcome you all to Yashaswini webinar series for women by the women. And on behalf of the chairperson of WEMEC, that is CA Preeti Savla Madam, and on behalf of vice chairperson WEMEC, which is CA Kemisha Soni, I welcome the speakers for our today's webinar, which is CA Rupal Haria Madam. She would be guiding us on the tax and accounting issues under Section 43BH of Income Tax Act. And we have our next speaker for the webinar, which is CA Chandrika Sridhar Madam, who would be giving us the key messages for fiscal 2024. And it's a great privilege that I am introducing the first speaker for today's webinar, who is CA Rupal Haria Madam. She is a practicing chartered accountant with Atul C. Beda Company. She is practicing over a period of 2 decades in taxation, corporate taxation, auditing, TDS, and indirect tax. She is a co-founder of EduTech Center, which imparts training to students, accountants, professionals, and corporates in GST, income tax, corporate tax, information technology, and compliances. She has conducted comprehensive audits for companies and LLPs, ensuring compliance with regulatory standards and best practices. Also, she guides organizations in streamlining their finance processes, optimizing their resource allocation, and improving their financial performance. She has groomed the accounts and taxation team within organizations to foster their growth and equip them with the skill needed for achieving organizational goals. She's also a trainer and speaker in various CA forums, Pan India and student forums. Also, she is a trainer at various colleges under UGC RUSA. Also, she is a trainer to professionals and corporates and faculties of ICAI. She gives online training to writer corporation employees. She has trained more than 300 income tax officers, and also she is a special invitee to Women and Young Members Excellence Committee of ICAI. So I, CA Palak Tikmani, Thane Vikasa Chairperson, hereby request our speaker, CA Rupal Haria Madam, to please enlighten us on the tax and accounting issues of Section 43BH of Income Tax Act. Welcome, Rupal ma'am.
Yeah, thank you, Palak. Such a warm welcome. I'm really delighted the way you have presented it. And I thanks CA Preeti Savla ma'am, CA Kamisa ma'am, and entire team for giving me opportunity to discuss this topic, which is need of an hour. So without saying other things, I'll just share my PPT and we can see the various aspects of our today's topic. Okay, so I'll share my screen. Give me 1 minute for Palak, you will be the link. If anything is going something wrong or not visible, you can guide me for that. Okay?
Yes, ma'am.
Yeah. So these topics which we are discussing today, and you might have read about it also. Today, specifically in the topic, we have added two different aspects. 43BH, it's tax and accounting issues. So before straight away jumping to the tax and accounting issues, quickly we will read and some little bit we will take a gist or glimpse about MSME related act and section 43BH. See, today when we are discussing throughout the time, whatever time period is given to us for this particular topic, we will be not only talking about income tax act. Simultaneously, we will be talking about MSMED Act 2006. Okay. So first, I'm just quickly, I'm the whatever that brief introduction kind of the things I'm coming to it. I will not emphasis more on it, but to you have a background to come up with the tax and accounting issue, we can discuss it. First of all, MSME, it stands for Micro, Small, Medium Enterprises, and MSMED Act, right? Now, today's in the discussion section 43BH, It is applicable only to micro and small industries. Just lock it in your mind. It is not applicable to medium enterprises. It is only and only applicable to micro and small. So now I will say in short MSE, so micro and small enterprise. So how you will determine, or how if you want to apply, your client want to apply, they have given the turnover criteria and investment in plant and machinery. This definition was revised in the year 2020. So what is the today's latest threshold limit to one entity to become a whether MSME? Just let's see this. If the type is micro, investment in plant and machinery and equipment. Just to for your knowledge purpose, here again in the act they have given the definition net investment, net turnover. So I'm not going in detail the formula for the net investment and net turnover, which they have introduced in the year 2020 in MSc Media Act. So these are the threshold today for micro. In your plant and machinery, investment should be less than or equal to 1 CR. And underline the word and. Here word or is not used. So both conditions should be fulfilled. Turnover that does not exceed 5 CR. Now I'm coming to small. Just simply this limit multiply by 5. So 1 CR limit will, sorry, multiply by 10. 1 CR limit will become 10 CR. For small machinery limit and turnover limit, 5 multiply by 10, 50 CR. And now for medium, multiply by 5. So 10 CR plant and machinery limit, it is coming to 50 CR, and 50 crore turnover limit, it is coming to 250 crore for medium enterprise. Just I'm giving you two important point over here for your consideration. While you are determining your total turnover, your export turnover should be excluded and GST amount will be included. So it will be not net of GST. Whatever this limit you will be calculating, it will be gross amount, it will be inclusive of GST. Now, this section 43B, which we all are aware about it, it is related to disallowance of statutory liability which we have not paid before the filing of due date of income tax return. Straight away coming to 43BH, most important you read the first line. See, it has been introduced in Finance Act 2023, but as the year passed and we have come closer to the March ending, and then the hype started. Yet, what is this 43BH? How it will be impacted on my profit, whether disallowance to be done, whether my enough working capital is there to make the payment to my MSME vendor, and also things. But my dear friends, this section was implemented itself from 1st April 2023, and see the name given in the Finance Act, socio-economic welfare. So prime objective for introduction of 43BH was to safeguard and protect small and macro companies, category entity. Okay. So this was about to for them. They should not go for the capital crunches because they are a small companies. They are coming up with their business. They are coming up, so they should get enough working capital and they should get the timely payment for the goods or services which they have sold. Okay. Now 43BH, this I have taken out the memorandum. Exact section word I have given here. The most important is the time limit which is specified under section 15. See, today basically I will talk about section 15, section 16, section 23 of MSMED Act. Okay. So just in the next slide, I have kept it in the simple word. Now, as per the plain reading, if I am the buyer from the MSC supplier, I have not made payment to them within the due dates, within the given period of time. Now, what is given period of time? That given period of time, it has been prescribed under section 15 of MSMED Act. Now, you will ask question, that whether this MSMED 15 also it was that proviso included from 1st April 2023. No, since 2006 when MSMED Act was incepted, that time onwards this section 15 is there, but no one was taking complying with that section. Due date was not considered. So to overcome all this problem, 43BH is introduced. Okay, so if I as per the section 15 due date is given, and if the seller buyer is failed to make the payment to MAC vendor, then the amount, see now my dear friends, just keep it in your mind. 43BH is talking about the principal amount. The amount of the goods purchased or services purchased will be disallowed. Okay, now we will see different parts of it. Just read the last para. What is important? Likewise, any other expenses which are disallowed, the non-deduction of TDS and all, then the year in which those expenses are paid, again the disallowance will be converted into the allowance. So say for example, 23-24 financial year, if I have not paid payment to MAC supplier in the given timeline, then it will be disallowed for the assessment year 24-25. Now I have made payment later on in the financial year 24-25. So when I will file my income tax return for assessment year 25-26, those disallowance will be allowed. Okay. So this is what section 43BH and section 15 is all about. So now just section 15 quickly I'm going through it. Supplies any goods or render any services to any buyer, the buyer shall make payment before the date agreed. Just underline the word agreed. Here it is, agreement is really important to understand. Agreed upon between him and the supplier in writing. Okay. So what is the first condition? That whenever there is any supply, and if there is an agreement in writing between the supplier and the buyer, then the due date will be different. And if there is no such agreement in existence, then the payment should be made before the appointed date. See now here three things we are learning simultaneously: agreed date, non-agreed date, and appointed date. Okay. So now what MSMED Act 15 is saying, whatsoever agreement, say let's take one example. A company is a MSC company, B is a buyer. B is buying good from A. Now they have made an agreement for 90 days. In writing, everything, all conditions are fulfilled, but section 15 says, as per MSMED 15 section, maximum 45 days are allowed. So whatever agreement you have made, 90 days, 60 days, 120 days, that is not material. You have to make payment within 45 days. Now take the reverse scenario. If the agreement between A and B, it has been made, but the agreement period is 30 days. Then X says that 45 days will not be applicable to you, even though you have made an agreement. But in agreement specifically, it is mentioned payment should be made within 30 days. So payment to be made within 30 days. So first part is clear. If there is a written agreement between buyer and seller, seller is a MAC registered, then whatever date agreement has been made exceeding 45 days, the number of days available to buyer for making payment is 45 days. Okay. Now coming to non-agreement condition. If there is no such agreement is in existence, then as per section 15, from the date of delivery, within 15 days, buyer has to make payment to the seller. So now two things we have learned, 45 days and 15 days. I hope it is clear with everyone, 45 days and 15 days. Now, these 45 days, if the agreement is there, 15 days, if agreement is not there, section 15 says from the date of delivery, buyer has to calculate 15 days. Within that 15 days, payment to be done. Okay. Now, if not done, then what? We will be discussing it in the later slide. Now, we have learned one more new thing, appointed day. So, definition is given section 2B of MSME Act. Appointed day is the day immediately after the due date or expiry of 15 days or expiry of 45 days. So if my 15 days is expiring on 15th March, appointed day will be 16th March. And if it is expiring on 45 days on 20th March, my appointed day will be 21st March. Okay. So if the payments are not agreed in writing, appointed date shall be the due date for making the payment. So this is the importance of appointed day and definition is given in the section. Now, section 15, section 2B, 43BH, we will discuss more in detail about it, all aspects. First, I'm coming to section 16. Now, again, you will ask me whether this section 16 is also introduced from and effective from 1st April 2023. No way. It is already there when MSMED Act was introduced. Okay. But as I am repeating again, the compliance were not fulfilled. If MSMED Act Section 16 talks about the interest on delayed payment. Section 15 speaks about the number of days within those days you have to make payment. And now Section 16 is about if payment is not done within due date, then what will be the interest rate? If buyer fails to make payment to the supplier as required under Section 15, the buyer is liable to pay compound interest to the supplier. Okay. Now, what is the rate of interest? Just see here. Buyer's liability to make payment as per section 15 and section 16 says if there is a delay in making payment, compound interest at the 3 times the bank rate notified by RBI. As if today, if we will see, it is approximately 6.75% or something. Exact, I'm not talking about the figure, my friends. So it will be 3 times, and that compounding you have to do monthly. Okay. So it comes to somewhere 20.75% and then compounding monthly. So this much interest liability, it is there. Previously, it was there. Either they were not paying sub buyer, they were making some adjustment in the invoice, or they were clubbing in it those interests which they have paid in some other head of the expenses. Okay. So today I will be discussing about reporting liability disallowance and everything about section 15, section 16 and 43 BH. So this is small and enterprise. I have taken one case study. So this chart, when I will take that case study, again, I will come to this slide. Okay. Now coming to the impact of section 43 BH, its impact on our accounting and taxation. I have prepared certain FAQ to understand it in very simple manner. So first, very simple question. We will start with the simple and then we will make it little complicated, right? So from which date it is applicable? It is applicable from financial year 23-24 and for assessment year 24-25 to whom this provision is applicable. Now, please pay attention here. It is a really important to understand because when any entity is taking registration as MSME, there are various types of the business they are doing. See, previously MSME, if it clicks to our mind, what it clicks, either it can be a manufacturing unit or it can be a service provider, right? Even we chartered accountant can also take registration as a service provider under MSME. Okay. So now, then afterwards, they have made certain amendment in the section and they said, yes, trader can also become and apply for MSc or MSME registration. Udyam Aadhaar registration number. So now here it is, they again there's some demarcation is there. that to whom this will be applicable, even though, and to whom they are, even though they are under the category of macro, micro, or small, but 43BH will not be applicable. So this provision is applicable to all assessee who are in the business and have purchased goods or services from any entity registered with MSME as a micro or small enterprise. Again, medium is not included here. Okay. Now coming to next FAQ 2A. Section 43BH will be applicable to retail and wholesale trade MSME. This query is literally about Mr. XYZ and company. They are registered under micro and small. They are coming under the small category. But what is their business activity? Wholesale and retail. Nowhere it is related to manufacturing or service provision. Then they are asking that whether 43BH will be applicable to us. However, benefit to retail and wholesale trade MSCME are restricted only to the extent of priority sector lending. They are not enjoying and having privilege to get all the benefits of MSME. Okay, because what is the nature of their activity? Trading or wholesale. So if they are not, they are eligible to enjoy all other benefits of MSME, then this act will not apply to those traders. Okay. So benefit of section 15 of MSMED Act is not available to traders, and section 43BH cannot be made applicable to outstanding dues to these traders. समझ में आया? Now XYZ and company, they are a trader. They are registered under small category. So for them, it is not applicable. So if they have sold goods to A and company, then they can say to A and company, see, we have registered under small, we are holding Udyam Aadhar registration certificate. So you have to make payment within 15 days because agreement is not prepared, because they are doing the trading activity. So they are not going to enjoy the benefit of section 43BH, section 15 and all. Okay. Now vice versa. If X, Y, and Z company is a small company doing trading activity and they have purchased goods from another small category of the company who is a manufacturing and service, then XYZ and company has to make payment by the end of the 15 days or at the end of the 45 days, as the case may be. But they themselves will not be able to enjoy the benefit of this section. I hope it is clear to everyone. Now, second question. If supplier is, my voice is clear, Palak? Palak?
It's absolutely clear, ma'am.
Yeah, thank you, Chandrika ma'am. If supplier is engaged in both trading as well as manufacturing or trading and services, so any one activity is added to the trading, then all the benefits of MSME they will be enjoying, and section 43BH will also applicable to them. So they will be able to enjoy the benefit, and then the buyer from this type of the entity where trading, which are the combination of trading and manufacturing or trading and service, they have to make payment within the prescribed time given in section 43BH and section 15. Okay. So this is really important thing one has to, because many queries are coming from client also, that now whether we should stop buying goods from the MSME because the 90 days time period otherwise we get in the market and all. Lot many things are people are discussing that what to do, and we are also now flowing with the queries. So I have tried to cover few queries here also in FAQ. What is the time limit in which payment is required to be made? Okay. So now again, I'm just repeating section 15 quickly. If the agreement is made, then the supply of the, it should be within 40 days Now, what is important? You will ask the question, from which day I have to count 45 days? 45 days from the acceptance of the goods and services. So, actual delivery of the goods or services or deemed acceptance of goods and services. So, from that day onwards, one has to calculate 45 days. And if the agreement is not made, the acceptance of the goods and services, from that you have to calculate 15 days. Okay. Now, what are the consequences if the payment is not made within the said time limit? Here now comes in the picture newly inserted proviso H to section 43B. If the payment is not made within the time limit, then the deductions of such payment shall not be allowed. So when I'm making my profit and loss account at the end of the financial year, and if say I have not made payment within the due date to the micro or small enterprises, then say I have purchased goods of worth rupees 20 lakhs, it will be disallowed and I have to add it to my net profit and I have to recalculate my tax liability on it. And this addition will be done under section 43BH. Okay, so this is clear. Disallowance will be done. Deduction once disallowed will be allowed in the financial year in which the payment is actually done to the MS enterprise, micro or small enterprise. But once you have to disallow it because the payment is not done within the due dates. Okay. So now here I have given one example. See, last line, just read it before the example. Deduction once allowed, disallowed will be allowed in the financial year in which such payment is made. Now in 43BH, there is one twist. If you are aware about section 43B condition, I'm talking about 43B, statutory liability payment. Here they are giving assessee a time lag period that before the due date of 139(1), filing of income tax return, if you have made the payment of such statutory dues which are falling under section 43B, disallowance will not be done. Now this benefit is withdrawn for 43BH. Now what they are saying, just take one example. If XYZ and company purchase goods from small enterprise A and company on 1st April 2023, 50 lakhs worth goods. Now from 1st April agreements were not done. So 15 days. Within 15th April, they have to make payment. They have not done the payment. So now what will come in the picture since the financial year is on? It is not yet completed. So now what will come? Till they will make the payment, interest which is prescribed under section 16, 3 times the RBI prescribed rate, compounded monthly will be applicable. Number one. Now, number two, whether this interest will be allowable expenses or disallowable. This interest will be disallowable expenses. You should not club it in any other head of expenses. You have to open separate account in your profit and loss account or income expenditure, whatever you are preparing. Now, coming to third thing, what here section 43BH say, if these 50 lakhs worth goods XYZ is purchased on 1st April, due date is already lapsed. But if they have made payment on by 31st March 2024, that means before the end of financial year in which goods were purchased, then under section 43BH, disallowance will not be done. So this misunderstanding is prevailing among clients also because they are not ready to understand. When we will file our return like other 43B, we will make the payment. Abhi 31st March ko we have not done the payment. Why you are disallowing it? Why you are asking us to adding it? Why you are asking us to calculate advance tax accordingly? We have to make them understand that this is the condition given under section 43BH. During the year, if you have lapsed the due date, interest meter will start as per section 16. But if you want to escape from 43BH disallowance before the end of the financial year, in our example, by 31st March 2024, please make the payment. So 43BH disallowance will not be done. It is clear with everyone? Now question 4. What are the consequences if the payment is not made within the said time limit? So first, interest to be paid as prescribed under section 16. Interest should be debited to P&L account. And while calculating the total taxable income, sorry, here typo error is there, interest will be disallowed. Reporting will come in clause 22 of tax audit report. Okay. And now over and above it, if by the end of the financial year also you are not making the payment which have already due during the financial year, then entire amount will be disallowed. Clear? Now 4B. Here little practical issues I have covered here. What are the various mode of payment will be considered as a payment done as per MSMED Act? See, for example, I have to pay XYZ and company, same example continue we are doing. XYZ and company has to make payment to A and company 50 lakh rupees. Then barter, they have said yes, barter it will be allowed. So within the due date, given due date, agar barter payment, A and companies instead of making payment, XY and Z and company supplying goods worth rupees 50 lakhs to A and company, it will be considered as payment. Second thing, for example, XYZ and company is saying to A and company, I'm not paying you 50 lakh rupees, but these 50 lakh rupees I'm considering as your capital introduced to my partnership firm. I'm offering you to become partner in my partnership firm. And if A and company is accepting it, then it will be considered as payment made during the given timeline. Okay. Now, third option. If the XYZ and company is a private limited company or some public company, they say we are offering you equity of our company. Then also it will be treated as allowable payment. And fourth option, XYZ and company is saying I am parking that 50 lakh rupees goods worth I have purchased from you under the loan account in my books of account. Then there is a big no. It will be not allowed as a payment. It will be not allowed as a payment done by XYZ and company to A and company for the goods purchased. Okay. Now, what are the various mode of payment? See, generally now we are in the digital area. So check, we will be physical check. It is really difficult to think about it. NEFT, RTGS, IMPS and other various mode of payment are there. But Act says, by chance, if you are doing payment through check, then what will be the date considered? See here, two things they have said, that date of handover of the check or the date of clearance of the check. So now in the act, it has been prescribed that the check which has been given by the buyer, it should not be PDC, post-dated check, and it should not be bounced. So for example, XYZ and company is handing over check on 31st March to A and company of rupees 50 lakhs. Then date of check should be 31st March or previous date. It should not be PDC date. Second thing, it should not be bounced. So they have to give that assurance. Bounce, so when they will present, then only they will come to know, right? But they have to give that assurance. Okay. And here in this case, date of payment will be considered as 31st March. Okay. Now, due date for payment falls on public holiday. See, generally when GST due date, TDS dates and all comes on the public holiday, then the next succeeding day we are considering. But in as per MSMED Act, they say previous day you have to consider as due date. For example, due date falls on 15th August. Then due date will be not 16th August, but for MSMED payment, due date will be 14th August. Lump sum payment made by the buyer for opening balance and purchase during the year. See now, for example, opening balance 20,000 as on 1st April 2023, purchase during the year amounting rupees 80,000. Now buyer has done payment XYZ date within due date, but they have made payment only 80,000 rupees. So how the allocation to be made? So यहाँ MSMED Act is saying you have to follow what section 59, 60 and 61 of Indian Contract Act says. Section 59 says that the buyer who is a payer has to say that how you are appropriating this part payment. Okay. So he says that 20 out of 70,000, 20,000 you consider for opening balance and balance 50,000 you consider for purchase during the year. Then whatever he says as per section 59. As per section 60, if buyer is not saying, payer is not saying, then recipient as per section 60 can appropriate the way he wants to appropriate. But again, they are saying here in MSME, in writing notification to be given by the seller, receiver of the amount, to the buyer how he is appropriating the amount. And if both are silent, section 61 of the Contract Act says, as per the FIFO method, you have to follow. Okay? So FIFO method, you have to follow. How could one identify by MSME or not? Simple. I have given your URL also. Most important, just register in your mind. Buyer, supplier should be having valid and continue, not expired one MSME Udyam Aadhaar registration certificate. Because वो बोलेगा मेरे पास certificate is there, but you have to check whether it has been expired or it is still it is running or not. This is really, really important. Okay. How should one maintain a books of accounts to comply with this provision? So see now in Teleprime, they have come up with the feature. So 4.0 new version has updated. So like see when we open the accounts masters, we create, right? We write the TAN number, PAN number, GST number. So here one, when you will be customizing and updating your tally, you can also suggest and guide to your client also. You have to mention their MSME number. But the most important, I will suggest here to for your client say per se that they have to, along with the Udyam Aadhaar registration certificate, the date till which it is live, because it is not till the date you cancel it, because every time they have to update and renew it. So simultaneously along with the registration certificate number, write the due date also of the certificate. So it is a practically accounting and then when you will do that feeding in your masters, that report you can generate that who all are your MSME creditors. Okay. Next, if any objection is raised by the buyer related to goods purchased and what are the due date. See today when any, in past also we all are experiencing along at every finance act when budget is presented by our finance minister, and they are coming up certain new things in TDS, in related to turnover, related to GST, related to 43BH whatsoever. And then we as a assessee, as a tax consultant, as a business organization, businessman, we find out that how no effectively or conveniently we use this section for our business. So what I'm explaining here, question 7, it is in context to that. Now what happened? XYZ and company has received goods on 1st March from A and company. Now for your quality related objection only it is allowed for changing the due date. What you have learned in section 15, whether 45 days or 15 days. that will be not applicable to this scenario, this case study. But if I say XYZ and company ने बोला, my item is of 12%, your accountant has mentioned 18% GST, you have not given the price which we have considered, all the objections are not only and only if qualitative objection is issued by the buyer to the supplier within underline 15 days from the date of delivery of the goods in writing. Okay, so all this way exercise to be done by the buyer. And your seller, who is a MSC, he accepted objection, and the time, till the time your seller resolved your query, your objection. So say for example, on 1st March, goods were delivered to XYZ and company. On 14th March, so within 15 days, they have raised the objection. It is accepted by A and company. Now, if A and company will resolve, say for example, we are now in 2024. We are today on 17th April. Just for your understanding purpose, I am taking future date. He will resolve it on 31st December 2024. Then from 31st December 2024, if the agreement hai, so 45 days you have to calculate for the due date of payment. And if agreement is not there, then 15 days you have to calculate. See here, some information is missing in the act, that within how many days seller has to resolve the objection raised on the ground of quality. So that is not mentioned here. Understood, everyone? So we should not misuse it, and we are a professional. We will not allow our client also to misuse it. But yes, they will come to know about it, and very in the near future, they will give the timeline to resolve the issue also, which is related to quality. So clear, everyone? Now here I have taken lot many things together. Whether following are covered under section 43BH or not. First, assessee opted for section 44AD, ADA, and AE 44 triple B. Here shipping companies are also covered, right? So this is basically presumptive income section of Income Tax Act. Now, presumptive, just to make you understand, and you all might be aware about it also, presumptive taxation scheme, it allows the assessee who have opted it to compute their total income in the specific prescribed formula. See, for calculating the turnover, specific prescribed formula is given 44AD, ADA. Then they have given 8% of the turnover, or 6% in AD, 50%, and so on. So they are governed by their own section. So here, just underline, 43BH will not be applicable to presumptive income section. So the assessee who have opted for presumptive income section, to them 43BH will not be applicable, because here presumptive income section will override section 43BH. Now coming to charitable trust, they are also not covered. Just think logically, rationally. Charitable trust, non-profit organization, so their income is exempted under Income Tax Act. If my income is exempted under Income Tax Act, then how can be the disallowance will be added to the exempted income? So charitable trust will also not be covered. Now, the buyers who are not having any income, under the head income from business and profession. So here, what type of the assessee can be covered? Can you think about it, my friends? Yes, the assessee who might have providing the services, or they have purchased goods for their personal consumption purpose, or some one-time usage purpose. So to them also, because business income ही नहीं है, So how you will add the disallowance? So it will not covered here also. Now coming to capex. Here many times people ask the question, when we are buying capital goods from small and micro enterprises, whether the same 43BH will be covered. See, now just think, come backside. See, expenses which are debited to your profit and loss account, to your trading account, and if the section 15 and 43BH guidelines are not followed, it will be added back to calculate your taxable income. Now, in your books of account, where you park your capital goods, we park our capital goods as per accounting principle on in balance sheet. If we are parking our capital goods in the balance sheet, and if the payment is not made within due date prescribed under section 15, then 43BH it is not covered. But section 16 will be heated of MSMED Act. So here, when you have purchased capital good from small and micro enterprises, 43BH disallowance will not come in the picture, but section 16 will come in the picture. You have to make payment as per the prescribed interest rate, and it will be disallowed as per section 23 of MSMED Act. Correct? Now, if the entity or business organization are following cash accounting system, just take an example. If I'm not following mercantile system of accounting, right? If I'm following cash accounting system, then how the question of disallowance will come? When I will make actual payment, that time only I will park entry in my books. Okay. So if I'm making the payment, then disallowance will not be there. So it is not covered. Now, most important, many times, this is the recent case for one of my big client also, upgradation to medium category. They are registered under small category. In March month, they have purchased lots of machinery also, and their turnover also crossed 50 crore rupees. So they have come to us that now, madam, we are under the category of medium. So why to do all this planning and all? Now we are under medium category, so this will not be applicable. But dear, in the rule, in the MSMED Act says, when there is a upgradation from micro to small, you are coming to the medium category. Now to the medium category, section 43BH is not applicable, correct? But Act says, for the next 3 succeeding financial years, you will be treated as small or micro as the case may be. So for the next, even though you are upgraded to medium category, you will be covered under section 43BH for the next 3 succeeding financial year. Okay. How year-end provision to be dealt with for disallowance under section 43BH. See now, if the payment should be made within 15 to 45 days from the actual delivery of the goods or services, but I'm making the provision in my books for which I have not yet received actual goods or services. Delivery is not received, but the provision I have done in my books of account. Okay. And till the end of the year also, actual delivery has not taken place. So though I have made provision in the books of account, but I have not made the payment. Why I have not made the payment? Because one condition is not fulfilled. What is been said in section 15 of MSMED Act, actual delivery of the goods or services. Then you have to calculate 15 days or 45 days. So there will be no disallowance under section 43BH. Compliance for MSME to claim the benefit. This is compliance related to MSME compliance. See now, MSME के लिए भी they have given the guidelines in the MSMED Act. If you want to claim benefit of section 15 and 16, then they have given the memorandum on the website. You have to apply online and you have to file memorandum. You have to go to the Udyam portal and you have to do the needful. Once you have uploaded that memorandum, then only you are eligible to claim the benefit of section 15 and 16. Buyer who has purchased goods or services from MSME. See, ये थोड़ा twisted है. Here I have taken the query. It is a really because when you will finalizing books of account, you will do the tax audit. और if tax audit भी नहीं है, normal business organization, very common query you will come across. The reporting part will be also twisted. So I have taken specifically this query here. If the buyer who has purchased goods or services from MSME, registered supplier, okay, but he has 194Q भी applicable है उसको, but TDS not deducted as a buyer, उसने TDS नहीं deduct किया 194Q. Payment is also not done within the appointed day. Then in the reporting part, disallowance will be under section 40A or 43BH because TDS rule also says that if the TDS is not deducted, then the principal amount will be disallowed. And the year, next financial year, whenever you are making the payment, it will be allowed. Though year percentage 30% it has been given. Like 43BH may 100% amount will be disallowed. Just for your knowledge sharing. See, for example, 40A may 30% amount they have prescribed and 43BH 100% total your purchase will be disallowed. Now, what is the reply to this query? Disallowance will be under section 43BH. So, agar 43BH hai, to 100% disallowance will be there and not under section 40A. Clear? Please keep it in your mind. Now, coming to reporting part. See, this just we are discussing, we are not in front of the real accounting figure because this since 2006, 15 section is there, 16 section is there, MSMED, but no one is complying. So now to protect and people start complying, they have added 43BH in Income Tax Act. So simultaneously, we have to study both Act, MSMED Act as well as Income Tax Act. Okay. Now, see, आपने disallowance you have done in 43BH, but for the non-deduction of TDS under section 194Q, you have to report under clause 26 of 3CD report. Okay. So this, please keep it in your mind. Carry non-disallowance we have not done in 40AIA. Then why to report? No, that reporting compliance is there. See, as an across, we are going ahead with the many case studies. You are just imaging how the auditors and tax consultant work has increased. We have to look so many things simultaneously. Okay. For this, the small amount with the payment is not done within due date. This is the last one. Reporting for CA. See, now they have amended clause 22 of 3CD. Okay. So amount disallowed under section, see here two types of reporting will come. First, amount disallowed under section 43BH. The tax auditor has to report all the amounts. Disallowable due to delayed payment to MSCs. Principal amount will also be covered under this clause 22. And then what clause section 23 of MSMED Act says, if the late payment has been done, right, then interest you have to pay to your supplier and that interest will be disallowed. It will be added to the income for calculating total taxable income. This is the part, working part. And now coming to the reporting part. In the 3CD clause 22, you have to report disallowance of interest also, which has been disallowed. You have paid as per section 16 of MSMED Act. Section 23 speaks about the disallowance. And then you have to report both principal amount and the interest amount. I hope this is clear with everyone. I have 2-3 minutes, so I have to just discuss one case study. Can anyone give me input about it?
Yes, ma'am, please go ahead.
Okay, thank you. Okay, So right now we have discussed certain FAQ. This is a simple case study I have taken. So whatever we have discussed, it will be locked and registered in your mind. So your written filing season, and even though you have not studied, I feel that little bit 30-40% your work will be easy. First date of the, just see कि उन्होंने order दिया, buyer has given order on 4th January. It is clear, this screen is clear, na?
Yes, ma'am. Yes, ma'am, it's clear.
Thank you, thank you. Date of supply is 4th February. Okay. So actual delivery kabhi hua hai supply? 4th February. Now any objection has been raised? No, objection not raised. Actual acceptance of the goods are also on the 4th February. Okay. Just see this where I am hovering my cursor. Now, appointed day will be the, see here, agreement is not prepared. Assuming that agreement, nahi, then what will be the due date? 15 days from the day of actual receipt of the goods. And what will be the appointed day? After the 15 days, next day will be your appointed day. So 4th February, we have received the goods. Okay. So 4th will be inclusive. So 18th February, within 18th February, we have to make payment to our supplier. So appointed day after 18-19 comes. So it is your appointed day. Now, if I have made payment on 18th, so due date, I have made the payment. So disallowance, no. There won't be any disallowance. Now, for example, my due date was 18th February, but I have made payment after due date on 31st March 2024. Just again and again, I'm repeating, 43BH is saying during the year you have not followed the due date, then interest provision will be applicable. You have to make payment and disallowance of the interest. But if by the end of the financial year you have made the payment, then 43BH will not be applicable. So disallowance of the principal amount will not come in the picture. So here second scenario may, if this was the due date, but I have made payment to my buyer on 31st March, then whether it will be disallowed? My answer will be no. Interest will be applicable? Yes. Interest तो अगर आपने due date miss किया, then by default it will be applicable. Interest will be disallowed? Yes. Reporting will be applicable? Yes. So this is the first case study. Now coming to the second part, I have considered base same, but here I have says that they have made agreement for 90 days. But section 50 says that as per MSME, maximum agar if you have made the agreement, we allow you only 45 days. So 45 days, if you are calculating from 4th February, it comes to 19th March. So what will be my due date? I have to make payment to avoid 43BH and section 16 consequences within 19th March. Now, quality objection raised? No. फुल एक्सेप्टेंस 4th को ही मुझे आया. अपॉइंटेड डेट 19th के नेक्स्ट डे 20th is my appointed day. Now in the first scenario, I have made payment itself on 19th. So within due date, disallowance no. Now say for example, I have made payment on 31st March. 43BH will not be applicable. Rest of the explanation will remain same what we have taken for previous case study. Now little twist in the last case study. Okay. Just give me 1 minute. See, I have purchased goods on 1st March. Say, 1 minute. Let me come. So goods purchase order भी 1st March को दिया. Supply actual delivery received on 1st March. Agreement, written agreement contract prepared. We have prepared it for 60 days, but we can't do anything because as per section 15, we can get only 45 days. So from 1st March, if you will calculate 45 days, your due date should be 14th April. Now ये देखो twist है. This due date is after 31st March 2024. Okay. Now what Act says, 43BH, that actual acceptance 1st March, acceptance day, appointed day is the 15th April, 14th is my due date, next day is the 15th, right? Objection raised, no objection raised. Now, for example, buyer has made payment on 14th April. Then 43, see now here, please consider this. See, one time you will feel that I'm telling you that before the end of the financial year payment is made. Okay, then no disallowance. Now I'm deferring to my saying only, but this is what 43BH explained us, my dear friends, that if you have made payment within due date or before the end of the financial year, disallowance will not come in the picture. And in this case study, my due date is falling after the end of the financial year. But after the end of the financial year also, if I am making payment within the due date, then 43BH will not be applicable to me. I hope this is clear to everyone. So if I have made payment on 14th April, then this amount will not be disallowed for financial year 23-24 and assessment year 24-25. Now, say for example, I have made payment और एक सॉरी मैंने एक डेट आगे लिखा था कि बिफोर ड्यू डेट ही मैंने पेमेंट कर दिया. Now say my due date was 14th April, but I have made payment on 20th April. Now all the provision will come in the picture. 43BH said, I am also there. You have to disallow say 10 lakhs worth rupees goods you have purchased for the bill कौन सी तारीख का है 1st March. So for financial year 23-24, assessment year 24-25, it will be disallowed. Disallowance? Yes. Interest applicable? Yes. Interest will be disallowed? Yes, it will be disallowed. And then reporting of interest? Yes. And last line, reporting of disallowance of expenses? Yes. This exercise I have to do in the financial year 23-24 and 24-25. Then next assessment year in 25-26, this 10 lakhs ka disallowance, which I have done, I will be allowing it. I can claim it as allowable expenses. But my dear friend, interest you can't claim. Interest will be once disallowed, it is disallowed. So you have to make payment also, and you have to disallow interest also, and on that additional amount you have to pay tax also. So this is all about issues which are, there are many issues. We can talk in series related to 43BH. But this is what I tried to cover for our today's topic. Thank you everyone. I'm so delighted to share this with you all my friends who are present on the virtual platform. Thank you.
Thank you, Rupal ma'am. Am I audible, ma'am?
Yeah, you are audible.
Okay. So I take this opportunity to extend our heartfelt gratitude to our speaker, C. Rupal Haria Madam, for sharing her expertise with us today. I'm sure, along with me, everyone else has also found this session as enlightening, and ma'am has provided us with invaluable insights into the intricacies of Section 43BH and its implications. And her case studies has certainly enhanced our understanding of this complex subject matter. And I'm sure it will prove valuable as we navigate the nuances of tax regulations in our respective endeavors. As we conclude this session, let us carry forward the knowledge and the insights we have gained today and empower ourselves to make informed decisions in our professional and financial pursuits. Once again, we thank you, Rupal ma'am, for your time, your expertise, and your generosity in sharing your knowledge with us. We are truly grateful for the opportunity to learn from you. Thank you, ma'am.
Thank you for such a wonderful vote of thanks. And I am also delighted to share this knowledge with all my those who are sharing virtual dais with me. I can see my co-speaker, Chandrika ma'am, who is there, and all my conveners. and all my beautiful participants. Thank you, everyone. So, Kruti, you will be starting next session, right?
Yes, ma'am. Thank you. Thank you, Rupal ma'am, for the very informative session. And as we take this series forward, we have CA Chandrika Sridhar with us. Welcome, Chandrika ma'am. I thank WMEC to provide me with this wonderful opportunity to introduce today's second speaker, CA Shri Chandrika Sridhar ma'am. She is a chartered accountant, a member of Institute of Chartered Accountants of India. She is based in Mumbai. She is a partner in a leading CA firm. She has about 2 decades of experience in providing assurance and advisory services to Indian and multinational companies across the countries. She has experience of speaking on various topics in various fora. So, Chandrika ma'am, we welcome you on behalf of WMEC, and please throw some light on the topic of for the day, key messages for fiscal 2024.
Thank you, Kruti ma'am. Thank you so much. Thank you, Rupal ma'am. I think yours was an absolute fantastic session. And
Thank you, ma'am.
I've kind of made copious notes. I think it's going to be extremely useful, and hope you would be sharing your deck as well as the Excel spreadsheet. I think it was absolutely fantastic. Now you put me in a spot. I'm going to try
No,
to
no,
do my
ma'am.
best.
No, it's not
And
that, ma'am. You are senior and you are authority in that. Even I am also looking forward to hear you eagerly. And ma'am,
thank you
these
so much.
recordings are available on our WMECA platform.
Okay,
Yeah, on
okay,
the website, all recordings are available, ma'am.
okay, okay.
We are eagerly
I
looking forward to hear this novel topic which you are coming up with, ma'am.
This is only closing out session for 2024. But to kind of touch upon some areas that we're seeing regularly as inspection themes and inspection findings, whether it be the institute or whether it's NAFRA or whether it's cross border. It's pretty much a bunch of things that I've tried to put together, and things like can as a last minute checkbox as we're going on to do our audit engagements. This is primarily aimed at the audit fraternity. So for the auditors out here, I think it would be very helpful. So I'm just going to be sharing my screen. Please let me know if you're able to see my screen.
Yeah, ma'am, it is visible.
Okay,
Yes,
thank
ma'am,
you.
your screen is visible.
Yeah, thank you. So what I'm going to be covering today is fundamentally related parties, going concern, what we're seeing in cash flow statements, what could be the potential areas around CAMs, segments, audit estimates, external confirmations, red flags, some things that I thought that we could leave behind with you, and some important key takeaways in terms of how we go on to evaluate audit evidences and incremental procedures, key considerations in this macroeconomic environment, and how we must document all of this, and pretty much the importance of the documentation. I'll move on quickly to related parties. Insofar as this is concerned, we all know, all of us sitting in this, in this virtual arena, all of us are aware that related party is one of the key topics that is under discussion pretty much in a number of areas. And as part as going on to evaluate these two fundamental things, one is evaluation of the controls insofar as related parties is concerned, because as we all know, we have internal controls reporting that sits for pretty much all of India Inc., barring a very small segment. So, evaluation of internal controls around related parties, fundamentally from an identification standpoint, and then moving on to its pricing. That's a separate angle. This is something which is very important. And then going over to the substantive. So, what I thought I will cover is to just give some very quick takeaways in this area. The entire slide deck is of course, it's pretty much illustrative. It is not a very complete. So I won't be able to ensure a completeness because facts and circumstances in every engagement, in every audit engagement would be different. And consequent to which, the procedures that we would tailor would also be different. But this is going to give us a sneak peek. So first of all, to understand whether the company has enough policies over A, identification of related parties, and then looking at the transactions. B, identification of related parties is going to pretty much start at a master level, a customer master level, a vendor master level. So when there is a new person or a new party or a new entity who's going to be entering into a transaction with a company, then as part of the onboarding process, which is also a very important control, understanding as to there generally would be checklists that the person who's processing the vendor master would have, which would actually ask a number of questions, which is know your customer or know your vendor, which is obtaining information to be able to come to a conclusion whether a party could potentially be a related party or not, and then to go on to the relationships. In order for the person who is actually working on creating of a vendor master or making the change consequent to a new party or a customer master, there has to be education amongst the employees. So whether there is a process in place for the company to pass on this education, and are the people who are actually exercising this control know what they're supposed to be doing in this space. Secondly is, we all know our SA 550. We all also know that related party is pretty much the only area which spans all the various acts that we have in place, whether it's the Income Tax Act on the transfer pricing side of things, whether it is our Companies Act, you have your 177, you have your 188, which deals with this. Whether you have the old accounting standards, which is your AS 18, whether you have an Ind AS, which is your Ind AS 24, or whether it is a SEBI obligation, which covers a number of new things, that's a topic for another day. Pretty much all of these acts cover related parties. So therefore, SA 550, which is very, very important for us as auditors, is understanding as to whether a party need not necessarily be identified as a related party, but based on the contract, based on the contractual terms, based on whether this particular contract has a business purpose, whether there is some rationale, or whether this is an unusual transaction. These are some things that we see from an SA 550 standpoint to understand based on that transaction whether the party could actually be seemingly related, because we still have a para 10 in Ind AS 24 that deals with substance over the legal form. So that is the first entire part of it. The next thing is entering into a transaction with a party who is then not really having either in the same line of business or not really having the financial capability of even being a counterparty to the subject entity that we are auditors of. That again is another trigger point. So here are some trigger points I just thought I'll leave in your memory as you go on to do our audits for this year. Then comes a situation of whether we understand clearly the business rationale, because end of the day, the accounting treatment that is pretty much put in place, whether it actually passes the smell test. You could have enough number of accounting standard sections of the accounting standard, which you might still be able to tick off. But if it simply doesn't pass the smell test of the substance, why was this transaction entered into? Does this transaction actually, does it seem fit for purpose? If you simply ask these two questions, you might be able to come to an answer insofar as the related party is concerned. Next comes into so far as accuracy and completeness of that listing and its pricing, and whether there are enough controls over the preparation and approval of related party disclosures. So all of these pieces are very, very important. Pricing becomes extremely critical from fundamentally a perspective of understanding a number of pieces. The red flags, which could be a potential undisclosed related party or a related party transaction, is listed out here. I would like to also quickly link this undisclosed related parties, because if there is a previously undisclosed related party that is popping up in a current year, then the question then becomes, there is a direct connection with the requirements of Ind AS 8, wherein a potential restatement could trigger. End of the day, if we all very quickly summarize related parties as a disclosure requirement, it's far from it. Disclosure is one of the requirements. A previously undisclosed related party, given that it is so significant and is one of the areas which is an area of focus by the regulators, it's very, very critical to keep our eyes and ears open in this space. Some of the things and some of the characteristics that I'm going to talk to you about are those potential red flags that could actually flag off a transaction and therefore in a reverse way a party itself. No interest or a rate of interest which is significantly below a market rate could be such. If there is no scheduled repayment, why would somebody enter into a transaction? For example, lending monies to a party or borrowing monies from a party when there is no underlying substance, which means I'm, as an entity, I'm not in the business of lending. Then why would I lend to somebody? And why would I lend to somebody at a price which is not consummate with the transaction? Because it could be prima facie prejudicial to the interest of my shareholders. These are some things that we must actually keep our eyes open as we go on to audit related parties and related party transactions. Is there a history of write-off? I have a transaction, I have a sale transaction. Is there a history of write-off subsequently without any collection efforts? Which means that I actually seemingly sell a product or sell a service and write it off subsequently, either within the same year or the subsequent years. For every write-off that happens, obviously, nobody is going to be selling a product or a service except up until the time there is going to be an expectation of collection, because this is one of the fundamental Ind AS 115 requirements itself, or even in the old AS 9. So end of the day, if there is going to be a series of write-offs and the write-offs happen without A, going legally, or B, without having any proof of having demonstrated an effort towards collection, these are some things that can again be a red flag in the storyline. The second thing can be a situation when there are conduits, right? When we're having our Rule 11E or a Rule 11F, that discussion, end of the day, it is like money is given from one and money is moving around. Money is actually not having any substance and still it moves around. That is another thing that we must be very careful about. We must also be very careful about, because then these could then be related parties. These could have been potentially undisclosed in the past. Many of these can also trample on a potential 143.12. So these are some things that we need to bear in mind, because these could have spiraling effects as well. Large unusual transactions, suddenly a customer or a vendor pops up towards the end of the year, and then there are these large unusual transactions. Suddenly transactions pop up in the year with a party who has just been recently set up. I would be speaking sometime later during the next 45 minutes or so, wherein there are some very specific sites, for example, Zauba.com. Whilst we cannot place reliance from a perspective because we could have never tested that as an auditor, it still is information available in the public domain, which can then be used as a sanity check tool. If we go into Zauba and we just put the name of the entity, which is a new customer or a new vendor with whom a large transaction appears to have been entered into, and if you find that the company has been formed recently, then who is this company? Why would I want to have a transaction with a company which has recently been set up? These are some things which are absolute red flags. Red flags not only for related parties, red flags equally for a potential 143.12 as well. Therefore, to quickly summarize, it requires professional judgment. We need to clearly understand the why of the entire transaction. Even if the management says that there are no related parties, yes, there is work to be done, because it just is not that simple list, which is an MVP1 that gets circulated or shared with us. It is going beyond that. It is going beyond that zone, because end of the day, we also need to audit our para 10 of Ind AS 24, which talks about substance over a legal form. Accuracy and completeness testing are very, very key, and therefore will need to sit as part of the working papers. And of course, there is no way we will be able to get past the hump of testing and being comfortable with what we've done for related parties up until the time that we on the professional skepticism and look at the evidences very, very critically. Moving on to going concern. Going concern is, what you're going to see today is a medley of key topics. It's not as if one topic leads to the other. It's just a medley of key topics that I believe would be critical as we go along for this year. Going concern considerations, again, we know today that there is a full section within CARO that we have to speak about a number of ratios. We have this wonderful standard that deals with the going concern, which is our material uncertainty and the related matters. We also have our CAM, wherein there could be some close call situations which we might still want to call out as a CAM. It is also a professional judgment that going concern matters. You might still additionally want to call it out as a CAM, although we might have called it out as the material uncertainty. All of these are judgments. However, when we're going to be speaking about this, and I'm not going to be speaking about every bullet that you see out here, but fundamentally, what is very, very important for a going concern evaluation is A, what are the controls that the company has while putting together the projections for the next year? Because end of the day, the decision that we're making is, does the company have enough cash to pay off its liabilities? That is fundamental. It has nothing to do with the profits or nothing to do with the net worth. All of those are indicators. But does the company have cash to pay? Or does the company have the ability to raise the cash to pay? When you're looking at this entire thing, what is it that is to pay? That becomes very, very important. The next 12 months, the next 15 months are very, very critical. So it's not going to be a Sigma 12 months or a Sigma 15-month evaluation. This has to be at least a month-on-month evaluation. That is very important because you could have a range of dues that fall due within the next 12, 15 months. They could fall due at a time of in 12 months or 15 months, the company might have the cash to pay. But at the point in time, when this particular amount falls due, when a particular amount, which is a payable to an MSME, we just heard ma'am some time ago, a payable to an MSME falls due, a payable to a lender falls due, a payable for an employee falls due, or a payable for any other obligation that falls due. There has to be enough money to be able to pay in that particular month. So it's a month, at least a month-on-month evaluation. If in a particular month the company does not have the money to meet its obligations, we still have a going concern issue. It's not that it is to be looked at only at a Sigma 12-month, 15-month. I'm just repeating this. We need to make this evaluation on month. Therefore, it's very clearly important for us to understand the maturity pattern of the assets as well as the liabilities. And if there is a mismatch, to clearly understand what is the funding obligation. This is something that large entities would have their treasury people department who will look at this. In other places, it pretty much be the CFO who will pretty much be making this evaluation. As part of this evaluation, one is information available within the entity, which we need to know. Two is information available outside of the entity. For example, if a company is going to be putting its hat on the holding company going to be supporting for any of its obligations, then there has to be a clear commitment letter. That letter of support has to be unconditional. The obligation of the auditor is to see whether the holding company has the ability as well as the intent to pay. The intent is going to be based on just because you're a holding company, they obviously will have an intention, but that intention should be demonstrated. They should have supported this company in the past as well. Put in the monies when necessary. In joint venture agreements, joint venturers putting in the money as necessary, driven by the agreement. The ability is whether the holding company in itself has cash to pay for its own obligations in the first place. If it doesn't, then how is the holding company? The letter of support then becomes equal to a letter which is fit to go into the dustbin, because end of the day, the holding company should have the ability to pay as well. Insofar as outside information, outside in is information which is actually available in the public domain, negative information, negative media reports, a credit downgrade. All of these things we have to have our eyeball on because all of these downgrade in credit rating. Why is it important for going concern? A downgrade in credit rating means that the company then may not be able to generate cash. There may not be people who are lenders in the market who wants to give them the cash. If a company is putting its hat on commercial paper, then is the commercial paper, is that selling in the market at that given point in time? Things change month on month, things change on a quarterly basis. So therefore, it's very important for us to understand the external world as well. Moving into cash flow statements. So this is one area which simply, from at least my experience, I've seen becomes a simple arithmetical exercise. It's far from that. A cash flow statement is a primary statement. You have the balance sheet, you have the profit and loss, you have the cash flow, you have the SOCI. End of the day, these are primary and the others. These are primary statements that we actually are specifically calling out as part of our assertions in the audit report. Cash flow statement, therefore, being fundamental, is forming part of your FSCP control. So end of the day, the entity prepares the cash flow statement. We need to understand the controls behind it. What's gone on behind the company being able to put together is just not an arithmetic between, two columns, which is last year number and the current year number. It's not that. It has to be, end of the day, a clear evaluation of what really the cash flows have been. The indirect method actually reduces to a simple comparison, but the adjustments that finally go in to this evaluating of cash flows is we need to clearly demonstrate that it complies with the requirements of the Ind AS 3 or 7 from a perspective of all of this. So very clearly calling out what is the risk of material misstatement, what can really go wrong in the cash flow. What are the events that have happened during the entire? There could have been a number of non-cash items. Those will have to be clearly called out. There are very, very critical activities that could have happened. There could have been a restructuring. There could have been a business combination. There could have been a new standard that could have impacted the cash flow statement. These are very, very critical pieces that we need to be very careful about. The company should have a control to call this out. The company should be able to clearly demonstrate in terms of what is the review type control that they have put in place to be able to come and tell us this is the cash flow statement that the board is prepared to sign off on. The board, end of the day, has the obligation, has the fiduciary responsibility for oversight on the financial statements, and they are actually signing off on this. We have a section 134.5, which calls out this, and it calls out the obligations of the board. So these are some pitfalls that you see out here. I won't labor so much on this. This is fundamentally insofar as the compliances with the standard itself is concerned. One thing that I would specifically want to call out is if there is an error in the cash flow statement for the previous year, which is being rectified as part of comparators, this in itself could be a trigger for a restatement. World over, the largest number of restatements happen in cash flows. So that is something, is available in the public domain by way of information, but it is simply not recasting, it is not just a readjustment of numbers to make it comparable with the current year. This is something that could trigger a restatement. Therefore, this is an area that we actually have to spend more time on and make sure that that's absolutely fine. Key audit matters. Each of us would have a different way of capturing this, but just I would like to labor on a couple of points, which is this is something that gets culled out from whatever is presented to those charged with governance. Fundamentally, the maximum amount of time that we as auditors have spent in a particular area. Our working papers will have to clearly demonstrate how this entire link has been, how the judgment has been actually done. And then you come to the key audit matter itself. Clearly calling out what were the procedures that us as auditors have performed. It's very, very important. You probably have 10 steps that would have addressed revenue as cutoff. Let's assume revenue cutoff was a significant fraud risk, and then we have a number of procedures that we have performed to come to a conclusion that that was fine. We don't give a conclusion at a key audit matter level, that's fine. But insofar as the procedures that we have performed for each of these gets spelled out in the key audit matter paragraph, it cannot be boilerplate. It has to be exactly what we did on an engagement. Therefore, every word That is an assertion. Every word that sits in a key audit matter paragraph in the auditor's report is a specific assertion that gets made. And therefore, it is absolutely imperative that those are clearly evidenced, documented, evidenced in our audit files. Because our audit files will, end of the day, only thing that stands in a court of law. So therefore, each of these will have to clearly talk to each other. So that is something that I thought that I should place it before you so that we remember this as we go on to close our engagement. Segment you would have seen is an area that has been a hot favorite of, it's been an inspection theme. Some things that I would like to, connect the dots insofar as segment, while you can read what's on the slide. Connecting the dots is A, the disclosures that get made in the financial statements. Let's start with revenue, various line items. I'm not saying each of these should be segments, but an evaluation of whether each of these should be segments is one. This is then linked to your disaggregation for purposes of for testing of your revenue for the samples that we pick. Very, very important. This then takes you back to the CGU, the cash generating unit that is being identified, because that has to be at the lowest level of aggregation. That is again is very important. So each of these items, whilst one may not lead to the other, the consistency has to be maintained between these. Where you have different judgments that come into play, your single largest judgment is going to be determining of what your CGU is. And then through the eyes of the management, what the segment is. These two need not necessarily be the same. But end of the day, we will necessarily need to evidence this in our working papers as to what the judgment was and what was the basis for our management's conclusion and therefore our conclusion. As you can see out here, this is another disclosure, as we all know, that sits as part of the results as well in the case of listed entities. The results also have segment information. And the reason that the results carry segment information is because from the top line, just from simply reading the P&L account, one can only make out that much. But once you go into segment, it then provides significantly incremental information that demonstrates the manner in which a company is looking at itself, the manner in which the CODM is actually looking at itself, the manner in which the resources of a company are being invested, as what is most important for them, which enables them to make the decisions for the entity. Therefore, segment reporting is very, very, very critical. Changes in the previous year's numbers to segment also could trigger a potential restatement. Investors and decision makers generally use segment information for purposes of getting to the decision of whether to invest or whether to exit. Therefore, very, very critical. So this is something that we have to have some key considerations that we have here. What does a CODM do? It's basically through the eyes of the CODM. That's what segment information is all about. Hence, how is the company putting out themselves in the analyst meetings? How is the company putting out themselves in the core part of the annual report, which is the board report? Those are very, very key considerations. If there is an IPO, or if there is a follow-on, or if there is a rights issue, you would find a lot of inputs which will come from those, because credit and your analyst reports, credit rating agency reports, all of these will look into a lot of things. So end of the day, they will speak a story. These will be connecting dots to understand as to what should have been the potential segment. Clearly then understanding any reconciliations that need to be made back to the financial statements, and how all of these are aligned to the management commentary, pretty much what I just now said, and controls around all of this. So whilst the substantive side of things may be great, the controls in terms of what does the company do to get to these decisions, these are key judgments, therefore extremely critical for us to go through the entire journey. Understanding it, what are the manual controls, management controls, pretty much would be manual controls sitting out here. What is the source? What is the IP or the IUC that's used to get to this conclusion? What are the substantive procedures? Very important here is how is the industry operating. Every company operates in a space, the space being the industry. Generally, you would find one of the comparisons that we always do is whether there are accounting policies adopted by an entity, which is an outlier, which again is a red flag. Are the segments aligned with each other? So that is another thing that's an outside in information that we need to take a look at. Auditing accounting estimates, I will just simply state here that this is something generally that you will find as a key audit matter, not all. This is a focus on the review type controls. You will generally find this as part of your critical judgment and estimate areas subject to a lot of sensitivity. That is an incremental information that you'll find as part of after the accounting policy section in a set of financial statements. You would invariably find this as part of your key audit matters. Again, to reiterate, not all, but the key ones. And you will also find the key ones would then potentially be a significant risk. And sometimes when there is a lot of bias involved, it could also be a significant fraud risk. Very critical for us to understand and evaluate this, because this is not only there sitting as part of our accounting standards, this also sits as part of our auditing standards. Very important to know what is the method which is being used. Is there a possibility of alternate approach? So I'm just going to give you a couple of examples out here. One, an approach which is when you're going to be determining the recoverable value, let's assume of a long-lived asset, or if it's going to be a goodwill, or if there is an indicator which is with respect to your investments or for your PPN. End of the day, it's important to understand as to what. Sorry? Okay. So a company could use multiple approaches. It could be the DCF approach, it could be the comparable companies approach, could simply be determining of the fair value. When they're going on to determine the value in use versus the fair value, and you're going to determine the recoverable amount. Number of assumptions go into this. Important for us to understand what are those assumptions. Important for us to understand the controls that the management has to put together these assumptions, the testing of those, and then our testing on top of those. So whether the data is complete, whether the business projections are reasonable, what are the supportings that we have seen for actually satisfying ourselves that those business assumptions are fine. Internal and external sources of data. End of the day, your revenue growth, which is ultimately sitting out there, or your EBITDA, or your profit margins, is easily comparable with people who are in the peer group. That's your comparable companies. Comparable companies is important to know, because that is something which is also going to drive your valuation. For example, it's going to drive what is the beta that is sitting out there. Generally, how the industry is operating, whether the growth rate really makes sense, how is the CAGR looking. So all of these things become very, very critical. Sensitivity is something which is also very important, because this is something that leads into the disclosures that is required by the indices as well. So there could be ranges. The management could have ranges of the valuation, because this is an area of significant uncertainty and because of the assumptions that get used. And then there could be a number of ranges that get used by us as auditors, either by ourselves or by a specialist team. It is critical to know how these two are being bridged, because this would then drive the number of disclosures that's going to actually happen. And also the more the difference that is there, then the more significant and the more it could toggle into your fraud risk as well. The other thing that I would also like to talk about is, if there are differences, we have to compare the management estimate to our estimate, wherever we are getting to, and evaluate the nature of those differences. There could be situations when the management estimate completely lies out of the range that we might have independently developed. Here is another thing that I leave behind, because then this is something that we need to evaluate to see if it could be a potential mistake, and then go on to see whether the controls have operated effectively. This is something that could have an impact on both your financial statement opinion as well as your internal controls opinion. This is an area, documentation, performance of the review type control, evaluation of your review type control and its documentation, and then looking at the substantive side of things. Oftentimes, it could well be a dual purpose testing. This is actually very, very important and critical and key. This is a regulator's hot fave, and this is a thematic that you will find in front of any regulator, local or foreign. I will skip this and move on quickly to external confirmations. I think I have another 10 minutes to go. On external confirmations, very, very quickly, we all know that we need to be raising it with all of those people that you see on this particular slide. But to quickly say as to why external confirmations, because external evidences are more reliable than internal. However, an external confirmation, which is going to be from a related party, to be viewed with skepticism. Then at what point in time you could do it at an interim point in time, you could do it at a period end point of time. How could you do it? It could be through paper, it could be through emails, it could be through a portal, there could be multiple ways of doing this. But what is very, very important is, as an auditors, to maintain control over the external confirmation request. It needs to be sent directly by us. Very critically, what is the information? What are we seeking confirmation of? That is a large judgment that we actually need to make. Determine the information that we require to be confirmed, the appropriate party from whom this confirmation is necessary to be sought. Follow-up request is very, very critical. Now, insofar as what happens is, I will just take this slide first before I go into alternate procedures, is when we are actually designing this entire confirmation request, right? We're going to be sending this confirmation to a confirming party to a particular address. Very important to, and this particular address, if it's going to be a creditor, goes back to your vendor master. If it's going to be a customer, it goes back to your customer master. There, changes, this is where your GITC controls and the testing of GITC becomes very important. It's all married with each other. Today, I'm not going to be talking about audit trail. I think that's going to be slated for another day. Here is where your audit trail also becomes very, very important, because a change, last minute change without a valid proof into a vendor master of an address could result in us sending the confirmation to the wrong address, and therefore that could potentially be intercepted as well. So this is something that we have to bear in mind. I'm just going to labor on for a minute on email confirmations. If there is an email confirmation that is being sought.
Yeah, you can continue, Chandrika.
Yeah,
I'm Preeti here.
Yeah, hi, ma'am. Hi. Just another 10 minutes and I'll hand this back to you. For an electronic confirmation, if it's going to be sent to a generic ID, let's assume a Gmail, then we have to have an antennas up. If it's going to be sent to a valid ID, which is going to be pretty much, if it's going to be a valid ID which is an ID with whom the company at all points in time uses that particular ID for purposes of the correspondences. Because we can't be sending a confirmation to an ID which is not something that the company generally is using. It then means, again, it's a red flag. So these are some things that we need to bear in mind. Therefore, when we're going to be sending this, call up once to the other party to ask, are you the right person that I'm sending this to you? Once the other side confirms, again have a call along with the client to say that, were you the right person? Did you confirm this? Are you sure? Do you know what you're doing? So these are some things that we also need to document as part of our testing. This is one area where we have to be very, very careful. And where confirmations are not received, reminders have to be sent. The confirmations and the reminders, you need to give enough gap between the two. If a confirmation is not received, alternate procedures will need to be tested, which is pretty much tracing back. If I'm going to take an example of an accounts receivable, tracing back non-replies to shipping documents. Shipping documents and invoices is just not one-sided. If it's going to be ultimately, if delivery was determined to have been the point of recognition, then we also need to see acknowledgement of the customer. Here is where we're going back to see if the sale itself was genuine in the first place. That is the reason that we're looking at these alternate procedures. Very quickly, some red flags that I promised you that I'll talk to you about. Some of these red flags are inadequate segregation of duties. So SODs is one area that is as part of our GITC testing or as part of your ACTT, many of us must be running these tools, or simply understanding who the maker is, who the checker is. These are very, very important things. I'm going to give you one example. Live example, inventory, you have a storekeeper, and as part of the management control, all companies have physical verification as one of their key controls. If the storekeeper is the one who is going to be doing the inventory physical count, there is no segregation of duty. That is one of the things which is then a red flag for us to see that is, does the inventory even exist? It goes to that extent. Any of these red flags, if not well answered, have the ability then to become a potential 14312 as well. If there is a continuous failure to correct a material weakness or a significant deficiency in an internal control, if there is rapid growth and it's unusual profitability that we're seeing, there are complex transactions, if there are excessive participation by the management, for example, if you're going to have certain types of journal entries that are by design needed to be only signed off by the CEO, I'm giving an example, that is a red flag because you don't expect the CEO of the company to sign off a journal entry voucher. So those are something that we really need to bear in mind when we're going on to test the samples that we do. A high degree of professional skepticism is therefore required if there are missing documents. Let's assume that we are actually giving the samples saying that here are the samples that I've selected and I'm kind of getting the information from the client to do the testing. And when you're doing this, we realize that one sample, the underlying evidences is not available. Replacing that sample is not the answer. Where evidences is not available, that is a misstatement. It is a known misstatement, and that is something that then needs to be extrapolated against the entire population when we believe that this sample is representative of the entire population. Therefore, missing documents is very, very important. If there is a mismatch, for example, I have a contract, I have an engagement letter for a particular service and the invoice, these two don't talk to each other, then is there something which is not seeming okay? Then you have a situation when you can actually, we don't need to be handwriting experts, but if you look at those signatures, something generally strikes a bell. Something just would not seem right. You will know it in your pulse. Take a step back and start digging more. If there is altered, some documents are being altered, end of the day, we are making our opinion as auditors on the basis of sample testing and on the basis of whether the evidence that has been made available to us is sufficient and appropriate for the purposes of our audit. So all that you see out here is basically taking a step back to see if whatever we obtained, is that sufficient and appropriate for the purposes of our audit. If it isn't, then we are actually bordering on, was the transaction genuine in the first place? So how can we do this? We can actually do through multiple ways. One is just looking at the entire bunch of samples. The second thing is doing an outside-in kind of a testing. Validation of various things. I'm just going to talk to you about a few. I spoke to you about, we covered all of these, pieces on the sources of funding. And, if your scale of operations, if your revenue is not matching end of the day to your install capacity, then something is kind of not okay. When you're going to be doing a lot of search in the public domain, there is a way in which you can actually search. And by actually using simple inverted commas and other operators, your search results can be very, very narrowed down. It kind of really helps. Some of the sites that you can use for the search for an outside-in information is zoba.com. That's a very, very good site. You have something called a Parivahan, eparivahan.com, which is basically not listed here, but I'm just saying that to you. When you go to eparivahan.com, if you're going to have a delivery challan, which gives you a particular registration number of a vehicle, you just simply take it and you put it in eparivahan.com. You will then be able to make sure, understand what was the type of the vehicle. Did the vehicle even exist? What was the type of the vehicle? Could the vehicle have even carried the material that is purportedly stated to have been sold as per that sales invoice? To that extent, you will actually be able to check. Zoba helps you to understand When was the company incorporated? The counterparty I'm talking about. When was the company incorporated? Which is the line of business? Who are the directors? What is their address? What is your line of business? All of this you'll be able to understand. A simple Google map, you'll be able to understand whether the company, counterparty, which supposedly is selling maybe steel rods, is he actually sitting, and the address which is sitting out there, simple Google map will be able to tell us, did that company even exist? So there is enough and more information that is today available in the public domain, which helps us get into a sanity check. Is this even making sense? That is the level of sanity check you will be able to do. Very quickly on macroeconomic and geopolitical uncertainty, you have the war going on right now between Iran and Israel. There could be situations, possible problems in the Suez Canal. There could be a lot of supply chain disruptions between Russia and Ukraine because of that war. Doesn't seem to be subsiding. All of these are certain things that are getting to a geopolitical uncertainty. These could have a potential impact on crude prices, on energy prices, on insofar as security concerns, high interest rates. It could All of these could also result in potential cyber attacks. Cyber wars can happen. We open our minds to possibilities of all of these because the current potential supply chain disruptions, to understand whether for the subject entity that we are auditing, are they susceptible to any of the, bearing the impact of any war or any geopolitical considerations. And these will have to actually sit as part of our evaluation of the estimates, the future estimates, like impairment considerations, which is going to go for the next 5 years, which could be a forecast period. Going concern considerations because of a particular product even being replaced by AI. So these are some things that we really need to be bearing in mind. There could be an onerous contract that could kick in. There could be a situation when the counterparty is invoking a force majeure clause, which means there could potentially be a going concern situation. There could be a country which is actually getting into hyperinflation, for example, Turkey, and the subject entity that we are auditing might be having significant transactions with Turkey. Then what is the impact? All of these things we will need to understand as to how is the world moving, and end of the day, document everything that we do. That is because that is the only evidence that we have in a court of law. It is the backbone of our audit. So let's not trivialize the nature, timing, and extent of audit procedures will have to be clearly demonstrated in our audit work, because that is the only thing that can demonstrate that we have complied with the requirements of SA 230. With this, I hand this to uh, back to you. I'm pretty much done.
Hello.
Thank you for the fabulous
Thank
opportunity
you. Thank you.
provided.
Thank you, Chandrika, for being there and sharing your vast knowledge on this very interesting and important topic for the time at this juncture of time on important audit aspects. And friends, we have this new year, we have started this Yashaswini series, and there are a lot of participants, about 1,000 participants, and they have actually gained benefit of this series. So today we had Rupal Haria, who has shared her experience on 43BH, and followed by you on this audit related things. And we have august presence of all the dear moderators, Kruti, Jinal, and all the moderators, Palak, and it was really nice to have both of you as the speakers. And I thank from the bottom of my heart, friends, again to announce with all of you, we are coming out with a session training on on independent directors, which is organized by Women Members Excellence Committee along with Indian Institute of Corporate Affairs, IICA, on 18th May at Mumbai. So mark your calendar. Also by that, we are also planning to have on 28th and 29th June, International Women Conference which is again held at Mumbai, first of its kind, first time in the history of ICAI. We will be having this International Women Conference. Last year, first time we have started with CA Women Awards at ICI, and followed by this first ever International Women Conference, which will provide opportunity to network and international speakers along with domestic speakers and all those things. So please mark your calendars. We are also coming out with this every Wednesday, Yashaswini series. Our all the speakers till June are finalized. Friends, still if you want to participate as a moderator, as a speaker, this is a platform provided to all women fraternity. We are also coming out with one mobile applications which will be providing an opportunity to connect to the firms who are looking for part-time and the flexi hour working uh, opportunities nearby or your area, or work from home opportunities. So all those things are being staffed in by women committee, by the women, for the women. So stay connected with Women Members Excellence Committee of Institute of Chartered Accountants of India. Signing off, CA Preeti Parasawla, Chairperson of WMEC Central Council Member. Thank you. Over to Kruti.
Hello, Preeti ma'am.
Thank you, Preeti ma'am, and thank you, Women Members Excellence Committee, for organizing such amazing and informative events and weekly webinars. Thank you, Chandrika ma'am, for such a detailed analysis and presentation, including so many topics, variety of topics. I know you have touched upon more, as many topics as you can, given the time, and really it's an eye opener for auditing professionals, especially during this upcoming audit season. So thank you, Chandrika ma'am, once again. Thank you, Preeti, and thank you, WMEC. Thank you, Rupal ma'am, for the 43BH analysis and along with detailed case study and FAQs. Thank you all. Signing off.
Thank you very
Thank
much.
you very
I'm
much.
traveling actually just now landed, so sounding like this, but it was great opportunity to interact with you all at the end of the session. Thank you very
Thank
much, Rupal,
Thank,
Chandrika, Kruti,
thank
Jinal,
you, Preeti.
everyone. Thanks.
Thank you,
Thank you.
everyone. Take care, keep hydrated yourself, and keep connected with Yashaswini Idol. To my
Yes.
all beautiful virtual participant and all those who are sharing virtual dais. Chandrika ma'am, it was really great insight you have given. I was also listening, just moving, but it was a really great delivery from your end too.
Thank
Hello,
you.
Preeti.
Thank you.
Nice to
Thank
see
you.
and
Thank
hear
you.
from
Thank
you.
you.
Vision of WMEC committee. Yeah. Thank you, everyone.
Thank
Thank
you.
you. Thank you, everyone.
Thank you.
Thank you. Thank you.